Well, I'm not a strategist. I'm a portfolio manager. I look at it in terms of what's the impact on the market. I don't think we'll go a long way into next year with no trade deal. Could there be steps along the way? Yes, I think there is. What is the impact on the market? I think if there was no trade deal, the market's up a lot this quarter, up a lot this year, we could have a market pullback. But I don't see a substantial decline because too many people want the market to pull back to get invested. And so I think the point is there could be steps along the way, a China trade deal, and that will be enough for investors to get invested in the market.
Quincy, what are your thoughts here? If the existing tariffs stay in place and are not rolled back, but no new tariffs are put in place, and there is some kind of skinny deal that looks nice on paper and means we sell more soybeans, is that going to be a driver for stocks in 2020?
I think it won't hurt stocks. In other words, I don't think you would go into the market just for that. But that said, it would provide a calm under the market. So what the market doesn't need are these zigs and zags of almost ad hominem attacks from the administration and then the Chinese side coming back. The market doesn't need that because who's the market? The algorithms see that immediately.
What do you mean ad hominem attacks? I mean, the president has gone out of his way
recently
to say, well, he's gone out of his way to say that he and Xi have a great relationship.
The relationship has come to that, but there was a point during the year where Xi was the enemy. He used the term enemy, and that was not very helpful. So having the market...
Not the first thing he's called the enemy, by the way,
Jerome
as
Powell
we well know.
Jerome Powell was the enemy as well. But we're in a good place now in terms of how we see each other. So, yeah.
Well, and you're bringing up the ad hominem attacks, as you call it. You actually expect more volatility coming from the political sphere than the trade sphere. Tell me why.
Because the campaign is heating up. And I think that it's going to be difficult. Notice you're going through an impeachment. The market is fine. Small caps are fine. The political calculus hasn't changed.
Does that make sense to you, that everything's fine even though we have articles of impeachment introduced on Capitol Hill?
Yes, because remember, we're looking at the market. The market says who is going to be the candidate. Any change in that, all of a sudden volatility kicks in.
Andrew, I wanted to ask you, you say that you're actually getting ready for a first inning of the capitulation trade. Tell me why you think investors are ready to give back some of their gains.
No, I don't mean that. I mean capitulation as in, look, the pattern of this year is very consistent with the past, which is when you have a big, nasty drawdown like we had last year, it actually sets up for the market to do pretty well. But unfortunately, investors, because they look backwards, they liquidate. They liquidated in 2012 after the nasty drawdown in 2011. They liquidated in 2016 after the nasty drawdown of 15-16. And they liquidated this year after the nasty drawdown of 2018. After about a year of liquidating as the market goes up, investors say, oh, wait, I made a mistake. I better get back in. And that's what happened in 2013 and 2017. Fund flows turned positive and investors invested.
Okay,
I think that's what's going to happen next year. And wait a minute, can I just finish? The volatility comment, I actually, if you look back on 2013 and 2017, there was very little volatility because every pullback was an opportunity to actually get invested. We had 3 down days around Thanksgiving, and then the market reversed. I think it's because the pullbacks give investors the opportunity to get in. An interesting factoid is in the last 35 years, every year where there's been net outflows from equities, the next year the market is up because people capitulate. So the capitulation is capitulating and getting back in.